All right, so I get to have some fun. I get to do what you normally do. I get to play with the charts here. So we're going to start with our first chart, looking at the S&P, the SPY, in fact, and kind of looking at the rally for the Trump trade. We're going to show it in just a minute. So you say right here, here's what we need to watch, kind of a gap right here. What's this gap telling us up here?
So I think that's our theme of the week, is to watch the gaps from last week. So we saw the very positive reaction on Wednesday, and with that, the market opened very strongly, and it left these gaps in its wake. So we are always watching the gaps, because if the market, or the spiders, or really any individual security, were to pull back very quickly into that gap, that tends to be a setback. So the gaps can be clues as to the sustainability of the up move. For SPY in particular, it rallied nearly 5% last week, a really impressive up move. Saw good upside follow through straight away. So it has a good chance of holding that gap, but it really does need to hold that gap to preserve the breakout this week.
All right, we are seeing a lot of enthusiasm, at least in the pre-market right now. So we'll have to wait and see if the technicals lead us in the right direction. I want to go to something else right now. I'm going to clear the charts. Again, this is a lot of fun. I see why you like to do this, Katie. Let's go to the VIX chart right now. So we're going to look at overbought and oversold conditions from here and then from about here. So the top line, I believe, is the overbought, and the bottom's the oversold. What is that telling us? What are the charts telling us here?
It's really interesting on the VIX. A very clear trading range has unfolded. That range is bound by support roughly 15 and resistance roughly 22, 23. Within that range, we would say that the high volatility cycle that began in July is still intact. Whereas if that 15 area was broken more decisively, the bottom boundary of that range, that would suggest that the market is indeed going to be able to continue higher. And of course, that would mean a lower volatility cycle has taken hold again. So with an oversold condition in the VIX near that support, you would expect to see some consolidation, meaning it starts to go sideways and ultimately sees an oversold bounce. And you could then translate that, of course, to the S&P 500, to which it's inversely correlated, and expect some kind of consolidation and pullback in the S&P. It's just a matter of how dramatic is that going to be.
All right, Katie, we're going to get to another stock, newest Dow component. Every trader I talk to owns it, talks about it all the time. We used to almost be CNBC / Nvidia here, so I'm talking about Nvidia, of course. I'm going to show the chart right here. So right here, we're seeing the 100-day moving average right here. This is the purple line, the purplish line. The 200-day, that's the goldish line. And right here, you're seeing an area of resistance. What does that tell you about this stock and this trade?
So we're saying that Nvidia is so-called testing resistance. The 141 level was cleared very decisively last week on a 9% rally. So that leaves a breakout pending confirmation this week in our work. So on Friday, if we see a close above that level by Nvidia, that would confirm the breakout in a bullish development. The measured move price objective from that breakout would be about 157. Maybe that's a little bit conservative longer term, but it's more of an intermediate term objective. And the reason we would wait for that confirmation is really twofold. One, because Nvidia, like everything else, has that gap that we want to keep an eye on this week. But there is a short-term counter-trend signal likely today from our DeMark indicators. And also there's a pretty good spread right now to support, which is roughly 130 for Nvidia. So we really want to see that confirmation to feel like we can then be more constructive on the upside follow through for Nvidia.